The chairman and the MD of the company, now joins in on the phone line for a quick chat on that. Hi, sir. Thank you very much for taking the time out. So with regards to this particular rating upgrade which has come in, how does it change business for you in terms of fundamentals? Does cost of funds get cheaper? How much debt do you have on books? Are you planning to probably increase debt on your balance sheet as well?
Yeah, I see that one, of course, it facilitates borrowing in terms of cost as well as liberalism that possibly institutions show towards higher rated companies. So I think it will end up giving us a relief of 0.25% in my estimation in the interest cost to the company. As on today, the second question you asked, what is the total debt? We have a funded debt of about 1,200 crores of rupees. Which we have taken from the banks, and most of it is the TUF debt. However, it has a cost to us, and I think we will approach the banks now to see they can readjust our rate of interest, keeping in view our present revised rating. Third, of course, as you asked for the further debt, of course, we have a plan to execute expansion. As we have already indicated in our annual report, so we will be coming out with the annual report, almost in the range of about 1,500 crores of rupees in the coming 2 years, starting from 17, 18, 18, 19. So this will entail additional borrowing. Some part of it will be TUF, but again, it will definitely make our funds cheaper, borrowing cheaper. This is what I can look out, and however, this is, I'm very thankful to CRISIL, but we have been waiting long for this because we deserved it to be there, but CRISIL finally realized maybe they found that in textile there's no company as yet, purely textile companies which may be having a AA+. So they took a little longer time, I would say so, but we are happy to be with the very good rating company.
Right. Mr. Oswal, just very quickly, two things. One, if the cost of borrowing in the market remains the same, I mean, where do you expect your average cost of borrowing? You said you'll need to borrow more money and the rating upgrade will help you raise funds at a lower cost. Where do you see your average cost of borrowing being in the next, say, year and a half, 2 years? Substantially lower than where we are?
No, not substantially. It will be, the margin is always 0.25%. But 0.25% in terms of total debt, if I have on my books about 1,500 crores of rupees, means roughly it can give me a saving of about 3-4 crores of rupees. And besides that, it becomes easier because then this kind of debt is easily sellable. And if you go in the bond market or the open market, institutional borrowing is one part. Other is one can go in the bond market. There also, the particular rate prevailing is all in reference to what your rating is.
You mean you can access funds via the bond market? That's what you're saying? Not
yeah,
go to banks,
we are thinking of coming out with some in the near future about a bond of about 400-500 crores of rupees to be raised, just for our medium-term requirements of funds which can arise later on in view of the potential for expanding our capacities. Okay. This is what we are foreseeing. Huh?
All right, Mr. Oswal, we're going to leave it on that note. Thanks very much for joining in. Vardhman Textiles, that one.